Welcome to session 2 of the voluntary liquidation regulations. We go to regulation number 15 and we'll continue with the Q&A format. Proof of claim. Should a stakeholder give any proof for his claim? Yes, he has to give a proof of claim. How shall he submit his claim? There are forms prescribed for submission of claims under the regulation itself in Schedule 1. Claim by an operational creditor in Form B to Schedule 1. Supporting will be record of an information utility, contract, order of court or tribunal or financial accounts. Claim by financial creditor, Form C. Employee or workman, Form D. One representative for all employees and workmen put together will be Form E. Any other stakeholder, Form F. 20. Proving security interest. How shall the existence of a secure interest be proved by a secured creditor? Information utility, ROC if the charge is registered there, central registry under SURFACE, other relevant documents and records which establish the security interest. He has to prove, no, he can't say I am just a secured creditor. He has to prove how he is secure. Production of bills of exchange and promissory notes. Where he is the holder, he has to also produce the document before the claim is admitted. Substantiation of claims. Does the liquidator have the right to tell a party that he has to substantiate his claims? Yes, he has a right. Who shall bear the cost of providing the proof? The claimant shall submit the cost of providing the proof. What happens to the costs incurred by the liquidator to verify the claim? Suppose I am hiring somebody and asking them to check and take on record the final list of claims. It shall form part of the liquidation cost. What happens when a claim is false? Two things can happen. One, I can recover that cost of doing that particular claim process verification from the claimant. Two, I can provide the details of the claimant to the board for giving a false claim. Determination of quantum of claim. What happens if there's a lot of confusion? It's not precise. Then the liquidator can make a best estimate of the amount of claim based on consultation with the claimant and the corporate person and the information available with him. Then what about debts in foreign currency? They shall be valued in Indian currency at the official exchange rate on the liquidation commencement date. Official exchange rate means RBI rate published or referred with reference to those rates. Derived rates with reference to those rates. This is a star point. What happens to periodical payments like rent, interest and such other payments of periodical nature? A person can claim only for amounts up to the liquidation commencement date, which means automatically after that you cannot prefer a claim. Debt payable at a future time. What happens if the debt is payable only, let's say, 5 years hence? The regulation provides for computing the NPV in the following manner of the debt so as to be able to settle it. X divided by 1 plus R to the power of N, where X is the value of the admitted claim, R is the closing yield rate of the government securities of the maturity N, which is the power of N, on the date of distribution as published by the Reserve Bank of India, rate on that date as published by Reserve Bank of India for today on the date of distribution. N is the period beginning from the date of distribution and ending on the payment of debt expressed in years, months in a decimalized form. That is the period, the intervening period between the actual due date and the proposed date of distribution. That's about it. Mutual credits and set off. What we covered was regulation number 27. 28. Is somebody entitled to a mutual credit and set off? Yes, he is. I owe the corporate person 50 rupees, but the corporate person owes me 100 rupees. Can I set off? Yes, I can. You can't say, no, you pay your amount and then I will settle you in the distribution under 53. Mutual credits and set offs are allowed. Verification of claims. How many days does the liquidator have to verify the claims? He has 30 days from the date of receipt of claim. Please remember, for all verification of claims, it's from the last date of receipt of the claim. A creditor can appeal to the adjudicating authority against the liquidator's decision on how much claim he is admitting. Within 45, then the next is a list of stakeholders. What is a stakeholder list? Who are all going to get benefited by this liquidation process. When shall the list of stakeholders be done? 45 days from the liquidation commencement date. What is the other report that has to be given on the same date? Preliminary report. What all will the list of stakeholders contain? Details of the stakeholder, how much is the debt admitted, how much is secured, how much is unsecured, and proofs which have been admitted or rejected in whole or parts. And can this list of stakeholders be modified? Of course it can be. And who shall it be available for inspection? By the people who submitted the information and the claim, members, partners, directors and guarantors, website of the corporate person, website designated by the board. Then the next question, how can a liquidator in a voluntary liquidation process sell the assets? In the manner and mode approved by the corporate person. See, only in a compulsory liquidation driven as a result of failure of CIRP, you have to look at maximizing, you have to look at your public auction, private sale and all that. Here, it's a liquidation is a process that the company has initiated. So they will specify the manner and mode approved by the corporate person. Asset includes an asset, all assets, set of assets or parcel of assets. Recovery of money due. He shall endeavor to recover and realize all assets in a time-bound manner. Now, suppose he can call uncalled capital or unpaid capital. Now, where there is an uncalled or an unpaid part, the liquidator can call and the contributory has to pay within 15 days. What happens if the contributory doesn't pay? He'll say, okay, I have to give you money, you have to give me money. So, why should we do? No. 33.3 says no distribution shall be made to a contributory unless he makes his contribution to the uncalled or unpaid capital as required in the constitutional documents of a corporate person. Then we come to chapter 7. How shall he realize his proceeds? Through a bank account. What shall be the name of the bank account? It shall be the name of the corporate person followed by the words involuntary liquidation. Which bank should you keep the account with? In a scheduled bank. First of all, what is the rule for depositing realizations? Realizations shall be deposited intact. He can't say, I got 50,000 rupees today. I will keep 10,000 for my expenses and deposit 50,000. Not allowed. He has to deposit the entire money received, and the realizations of each day shall be deposited. How soon does he have to deposit? What must be by banking efficiency? Not later than the next working day. That's the norm. How much is the total value of payment that can be made other than made by cash? It's only up to 5,000 rupees. Anything in excess of 5,000 shall be made by a check or by an online banking transaction. Distribution. How soon does the liquidator have to distribute? Within 6 months from the date of receipt of amount from the stakeholders to the stakeholders. What cost can be deducted? The liquidation cost can be deducted. What happens when an asset cannot be readily or advantageously sold? It can, with the approval of the corporate person, be distributed among the stakeholders. You can say, okay, this is 50 lakhs. Okay, I'm anyway not able to sell this house. So I will give you this house which is equivalent 50 lakhs. Return of money. If any liquidator has a stakeholder shall forthwith return any money which was received by him in the distribution which he was not entitled to. Suppose you have given him extra money wrongly, he has to return it. Completion of liquidation. What is the time frame within which liquidation has to be completed? Liquidation has to be completed within 12 months in the case of a voluntary liquidation. What happens if you don't complete the liquidation within 12 months? Within 15 days from the end of 12 months, you shall hold a meeting of the contributories. And at the end of every succeeding 12 months where there's a failure, you have to hold that meeting. And if the liquidation process is continuing for more than 12 months, then he shall present an annual status report giving details of the settlement list of stakeholders, details of assets that remain to be sold, distribution made, distribution of unsold assets to stakeholders, material litigation, and any applications for avoidance of transactions under section 26 of the code. After all this is over, what is the final last 2 steps? He has to prepare a final report. On completion of the liquidation process, the liquidator shall prepare a final report containing the audited accounts, statement demonstrating that the assets have been sold, the debt has been discharged, no litigation is pending. And 4, a sale statement. To tell what is my sale, what are the assets that have been sold, what is the realized value, what is the cost of realization, what is the variance between the registered valuer's value and the value at which I sold, who bought my asset, and any other relevant detail as may be necessary. Who should he submit the final report to? He has to submit the final report to the registrar and to the board. Why? Because that resolution I actually filed under subsection 5, under subsection 4 of 59, it says the company shall notify the registrar of companies and the board about the resolution for voluntary winding up. So I went and told the registrar and the board something. So I have to finish back to them. So the final report also has to be submitted to the registrar and the board. And he will file it with the adjudicating authority along with an application under section 59(7), which is an application for the dissolution order. Based on that, the adjudicating authority, which is NCLT, will give a dissolution order, and it shall be filed with the authority with whom the corporate debtor is registered within 14 days for voluntary liquidation. It is 7 days for compulsory driven by creditor liquidation. Unclaimed proceeds of distribution. What happens to the unclaimed proceeds of distribution? Some creditor is not turned up. I have something to be given to him. It shall be transferred to the company's liquidation account in the public account of India. Now, what happens if he has not paid it into the company's liquidation account? He has to pay interest at 12%. When he is depositing money into the company's liquidation account, who should he give the backup list to? He should give it to the registrar and to the board, saying what is the name of the stakeholder, what was his last known address. Now, if any person at a later date wakes up and says, oh, I missed the process, my money is lying there, who should he make an application to? An unclaimed proceed of liquidation. He will make a application to the board, which is why you have to first give the board. You have to say, okay, Priya's name is on the list. Then when Priya applies to the board, Priya gets the money. After then, the board will release the money after satisfying themselves about the whether it is the same person, and they may ask him for such security from him as it may deem fit. Now, what happens if the money sits in the company's liquidation account? After 15 years, it will be transferred to the general revenue account. Detection of fraud or insolvency. Where the liquidator is of the opinion, are there any special procedures? Yes, there are. Where the liquidator is of the opinion that the liquidation is being done to defraud a person, he can apply to the adjudicating authority, which is NCLT, to suspend the process of liquidation and to pass such orders as it may deem fit. So there is one more. What happens when he is finding him to be insolvent? Where the liquidator is of the opinion that the corporate person will not be able to pay his debts. See, in the beginning, they thought they were fine. The directors gave a declaration of solvency, went ahead with the whole process, and then somewhere in the middle, the liquidator feels they don't have enough assets to repay their liabilities. He can make an application to the adjudicating authority for suspension of the liquidation process and to pass such orders as is may deem fit. Now, preservation of records. The liquidator shall preserve a physical or electronic copy of the registers, records, books, etc. of the corporate person for at least 8 years from the date of dissolution. See, once the company is dissolved, is the company there to maintain its records? No. So who has to maintain the records after liquidation? Liquidator has to maintain. How should he maintain? Electronic or physical form? For how many years does he have to maintain? 8 years after the liquidation of the corporate debtor, he shall maintain. What are the books and registers he has to maintain? It's the books and registers specified in Regulation 8. What were the books and registers in Regulation 8? Preliminary report, annual status report, minutes and final report. And he also needs to maintain the books that are specified in Regulation 10. Which is what? That long list of books. Fixed asset register, securities and investment register, inventories register, receivables register, cash ledger, bank ledger, tenant, decree, suits, unclaimed dividend, suspense register, all these registers. Please remember, it's going to be a lot of books, which is why they give the OR option, electronic option. The liquidator shall preserve electronic or physical copy 8 years from the date of liquidation with himself or with an IU. If you remember, when we did the IU regulation, we correctly said IU also has a responsibility to an IP who wants to maintain his records with him. Now again, so with this we conclude in a Q&A format the liquidation regulations, the voluntary liquidation regulations as applicable to a corporate person.